The world economy is going to hit the biggest financial headwind since 2022. The gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. And inflation is the worst tax of all.
Yeah.
And it just causes more people. And what Rel Pel is saying is we're going to shift to UBI, Universal Basic
Totally agree
Income,
with him. Totally
MMT, which is Marxism.
Yeah.
Someday you'll own nothing and you'll be happy. The government will give you your money.
So I think that right now we have a problem in that a high enough interest rate to adequately control inflation or provide an adequate return to inflation is too high of an interest rate for the capital markets and for the economy. So I believe that we're entering a period which it's going to be very, very difficult for the Fed and for other central banks to try to find that right balance. They're going to navigate between those two things. Too tight means a bad economy, and too loose means a bad inflation. And I think that difference is going to produce more of a stagflation type of environment. But you're taking interest rates up to something like 2%. And that 2%, which starts to squeeze the capital market, starts to make it more difficult for a holder of equities, because the equity, when you raise the return on bonds and you raise the return on cash and you tighten money, then that makes other assets less attractive, such as risky assets, particularly long duration assets like tech stocks and the like. So you produce that squeeze, yes, but that's still only at 2% or a little bit over 2%, with an inflation rate which is considerably higher than that. We've had a 7% inflation rate, and we'll probably settle, it'll be a 5%-ish or something. And so you're still losing that money to inflation. People are. So what you have is enough tightening by the Federal Reserve to deal with inflation adequately is too much tightening for the markets and the economy. So the Fed is going to be in a very difficult place a year from now as inflation still remains high and it starts to pinch on both the markets and the economy.
Inflation is a big problem. PPI was up 10% on a year-over-year basis in February. CPI was up 7.9%. What that meant was average hourly earnings were down 2.3% on a year-over-year basis.
I think part of the problem with the Fed's approach here is that it's assuming that if they just keep jacking up rates, that will reduce demand and that will stop or slow down inflation. And there's some truth to that. However, I don't think this inflation is purely a problem of excess demand. I think there's also a supply problem, meaning that not enough goods and services are being produced, and the commodities, the inputs that we need to the production of goods and services, those prices are increased. They've been inflated. And that started well before the Ukraine war, but I think the Ukraine war has now exacerbated this problem.
If you take a big step back to the day before the lockdowns started, we had a normal functioning economy that was growing by, call it, 2% a year. And the minute that we enforced these lockdowns, I actually think what we did was we started a supply side recession. I think the point is that, we were kind of in a supply side recession, and now by raising rates to some crazy amount, the end of which we're still not sure about, may actually then trigger the demand destruction to have a demand side recession. And so I don't know that we have lived in a modern point in time where both things have been true. Right? There's been a principle of macroeconomics that everybody's always kind of debating, is this a supply side issue? Is it a demand side issue? We know that in COVID, it was a supply side issue. We took all the supply out of the market. And now we're trying to figure out, when we exhaust, all of the money we've given people, and we destroy demand and take the incentives for demand to go away, right? Consumer confidence is now starting to turn. What happens then? Well, we're going to figure that out in the next 6 or 9 months. But the thing is, you have both that are true. It's not as if the supply side of the economy has been fixed. It's not as if everybody is running at 100% capacity. It's not as if all the supply chain issues have been worked out.
Yep.
So I don't know. I just think it's a very complicated situation.
I've studied these empires, these dynasties, going back since the last 500 years. And you see the same thing happening over and over again. When there's a financial problem, when the granaries are empty and the coffers are empty, they print money. And when they print money and the coffers are empty, it devalues money. And with that, when you have a large gap of people at each other's throats, then you create a risk of an internal conflict, a risk of some kind of civil war. And that is what I think is we're at risk of.
The yield curve, 2s to 10s, as I started talking about earlier, inverted. And again, that's a warning to the Fed. At 2.35% on the 10-year Treasury bond, which tends to track nominal GDP growth over time. So 2.3, 2.4%, that is telling the Fed, the bond market actually is telling the Fed, look, we think growth and inflation are going to be lower than expected. And in post-World War II experience, every time the yield curve has inverted within 12 months to 18 months, we have been in a recession.
Here's the problem. If you're borrowing more money than you're lending, and you have a lot of debt, you either are going to pay back in hard money or in soft money. And so it creates a very difficult trade-off. So what can you do? Do you spend less money? So that the trade-off becomes more and more difficult, and that's what brings about a stagflation environment. So I would say the most important thing is the redistribution of opportunity to make people productive and to eliminate the internal conflict, or to reduce the internal conflict, which can be so disruptive. When you see large wealth gaps, and at the same time you see economic problems, you have a lot of internal conflict, and that internal conflict is bad economically and it's bad socially. So yes, I think but it's not just the wealth gap, it is the productivity level that results. So the wealth gap is a problem, the opportunity gap is a problem, the productivity that allows, and productivity can be measured in what you earn relative to what you spend. So yes, all of that, that gap is an issue.